Good morning. My name is Bernie Mitchell. We're going to show you a trade. We call it the trade of the day on a method of trading that I've employed for over 20 years. It's called Fibonacci Impulse Strategies. And what we're looking here is a chart of the gold market. And a lot of people are currently interested in gold because it's made 28-year highs. And we got bearish on gold several weeks back. If you read my newsletter, you'd realize that we did get bearish near the highs. And the market has come down quite a bit. You can see by this chart it made a high of around 930 and kind of bottomed out around 900. Starting last Wednesday, the market made its bottom here, just around 900. And we're going to go bar by bar across over the next couple of days, and you'll see where we put some trades on to get short on the rally, because basically this method that we use pinpoints support and resistance with extreme accuracy. In this case, what we want to do is find resistance levels where we can get short the gold, believing that the gold still has a ways to go on the downside. Okay, I'm moving forward here. Now you can see the market went up a little bit, came back down. The first thing we do is we connect the trend line. Once we think a bottom is in, we connect the trend line from the high bar to the low bar. Okay, and once this trend line is on there, it's going to open up a software program that I developed several years ago. We call it Fibonacci Cluster Quattro. Okay, once that program is opened up in our trade station, we turn the status from off to on and we close it. Automatically on the screen will pop up 4 levels. These horizontal lines represent 4 levels of resistance, and we try to find trades at every one of these levels as the market should come back up and rally. So again, we're always selling rallies and we're buying declines. We don't use what we call breakouts. We sell into resistance and we buy into support. So as we move forward on this thing from last Wednesday into Thursday, you could see the market actually traded right up to this line on Thursday. And you'll notice that at the top of this little bar is a couple of colored dots. We call those squat bars, and that's actually our trigger to enter a trade when they fall within our cluster levels, and those horizontal yellow lines are our cluster levels. Well, you can see immediately the market came down and had a potential profit there from about 917 to about 905. That's about $12 downside, so there's a maximum there of about $1,200 a contract. The market actually continued back up as Friday began and traded to that level again, right to the 917 level, and then had another big break before the market finally closed. And you can see this is what you'll look at on your screen once you install the software. 917.40 was what we call lower resistance, and the market went from 917.40 all the way down to about 901. That's $16, represents about $1,600 per contract. If you had 3 of them on, that's $4,800 plus the profit from Thursday. There was a potential profit there of probably $6,000 or $7,000 with 2 or 3 contracts on over 2 days. Okay, now obviously past performance is never indicative of future results, but this gives you the potential. Now we have other exit rules that we employ. In order to learn this method, you can actually take this course online at my website, www.feargreed.com, or if you require further information, you can email me at pbsp@feargreed.com. That's Peter Bob Sam Peter at feargreed.com. Or after the market closes, I do take some phone calls. If you want to call me at 480-393-0671, 480-393-0671. Anyway, we'll be putting these trade of the days on in the future, so stay tuned. See some other great trades. Take care and have a great day.